Charles Darwin wrote that blushing is the most peculiar and the most human of all expressions. Monkeys, he said, redden from passion, but it would require an overwhelming amount of evidence to make us believe that any animal could blush. Investors may be forgiven for needing an overwhelming amount of evidence to believe that the cheeks of executives at Volkswagen are capable of reddening. They should also remember that shame is actually one of the most effective tools of corporate governance. Preferred shares of Volkswagen rose 4% this week as the company moved closer to reaching a settlement with the US environmental regulators over the 500,000 cars that were fitted with emissions-cheating software. During the scandal, Volkswagen's minority shareholders have watched in horror as it paid 12 current and former executives a total of 63.2 million euros for 2015, more than was paid out in dividends that year. Because of Volkswagen's complicated governance structure, its investors have had little choice but to meekly protest in private over such excesses, or to sell their shares. But with a settlement looking near, Volkswagen shares could actually look like a bargain. Volkswagen trades at just 5.5 times expected 2017 earnings, according to Evercore ISI, which is a significant discount to its peers. And this actually falls to just 4 times if you strip out earnings from its Porsche division. Volkswagen currently spends a vast amount of money on research and development. And as you can see here, Volkswagen actually has the highest level of spending on R&D of any company in the world, outspending Google and Amazon. If operating margins at its core VW brand unit can return to a historical norm of around 4%, then Volkswagen should be trading at over 300 euros a share. But Volkswagen has since said it will look to reform its executive pay structures, but at the moment its shares are still languishing at around 134 euros each, showing that the market clearly does not yet believe the company will ever be able to fix itself. So investors only have one choice: to make VW's management blush. So when enacting improvement through a proxy fight is just not possible, forcing reform through a public campaign is really the only viable route to clawing back the money they have lost. Steps taken by the activist investor TCI and Norway's oil fund are a strong start, but if the rest of VW's investors want to recover their losses, they must now make themselves heard.